Do you remember that game Bubble Mania? It used to be on, I think it used to be on teletext back in here in the UK when you had your TV, you could go to teletext and you could play games back when, you know how old I am now. And there used to be one called Bubble Mania, which was quite fun. As Midas lost his touch. Hi guys, thank you so much for joining me in another video. Today I want to talk about what is all this drama about Warren Buffett and him losing his touch. I was reading articles and watching various YouTube videos where people are saying that Warren Buffett doesn't have a clue about what he's doing anymore. Is he too old? Is he too blue? What is going on? The greatest investor ever has lost his touch. So let's just jump straight into this and find out what's going on. So no exaggeration then, there's a lot of media and press out there saying that Warren Buffett doesn't know what he's doing anymore. Well, I think that's a little bit of hype. And then within a few minutes and after reading and digging a little bit, I realised that every half a decade there's news that value investing, which has become synonymous with Buffett and the way that he invests, is dead. Personally, I don't understand why having a deep knowledge of a company's balance sheet and finances to make a decision whether you're going to invest or not can be a bad thing, to be honest. But let's sprinkle some facts. Where did these conspiracy theorists come from? In 2019, Berkshire Hathaway, which is a holding company for Warren Buffett's investments, was up 9%. Sounds great. But compared to the S&P was up 30%. And now that is mind-blowing, right? Because why is there such a big difference? The S&P made almost 3 times more than Warren Buffett's allocations. So fast forward back to the future, like what I did there. In 2020, year to date, Berkshire Hathaway is down 27%, where the S&P is only down 4%. Ooh, that makes the hair on your arms kind of just tingle a little bit. So based on those two facts alone, the performance data isn't great, is it? But you have to remember that value investing isn't something for that short-term gain. It has a much longer investment horizon. So you're talking about over 10 to 15 years when you're considering value investing. In addition to that, value investing requires a deep understanding of balance sheets, statements, how to buy companies at a low price, and then waiting for the markets to correct themselves. So it sounds like the bubble is about to pop. What we should be asking ourselves is, what is Warren Buffett seeing that we aren't seeing at the moment? So value investors think that we're in a bubble market at the moment. And in the last 20 years, we've had 4 already. So 2000, 2008, 2020, and probably 2020, the sequel. So in this kind of investment strategy, you buy stocks and bonds when the prices are low and before the Fed pushes up the prices. But isn't that what happens all the time anyway? Markets correct and recover all the time. It's an ongoing, continuous process. You guys tell me what you think about that down below in the comments. So based on that, we know that these bubbles are not for seasoned investors, because when things really do go belly up, we see corruption in the market. We see money that just disappears because it's fake money. So we sit it out. And this is where seasoned investors rely on fundamentals and focus on trusting that the market will recover like it always has. But to be honest, a lump of coal will always be a lump of coal and a diamond will always be mined, right? So what are these bubble markets suited to? So what is this market suited to then? It's those Robin Hood investors that are too naive and too green to see the risks that they're taking. And they don't see the danger and the traps that are being laid by Mr. Market, or who was the villain in Robin Hood? Is it the Sheriff of Nottinghamshire or something? Yeah, by the by. So this brings me on to the second part of what I want to talk about. I did a post last week about the top 5 things day traders should think about. I'll link it here if I can somewhere. So as we know, the lockdown has created the return of the day trader, whether it's because of boredom, whether it's because people have extra money, whether it's because people are watching a lot more YouTube channels that are flashing Lambos. I don't know, but the market is filled with this bubble mania. Guys, do you remember that game Bubble Mania? It used to be on, I think it used to be on teletext back here in the UK when you had your TV, you could go to teletext and you could play games back when, you know how old I am now. And there used to be one called Bubble Mania, which was quite fun. So what I'm trying to say is there are bubbles, and then there is just pure mania, and that's the boom in tech stocks at the moment. Now these companies are probably valuable, and they probably be worth just a chunk of what the market thinks right now. But there are other things in the market that are happening which are just plain crazy. Let me know what your opinions are on this next bit, especially. So if you look at Tesla, back in January it was going for around 400, and now fast forward to the day today. Whilst recording this, I've had a quick look, and it's going at 1,200, and it has a market cap of 225 billion. That is bigger than Toyota, one of the largest producing car manufacturers in the world. Its enterprise value is greater than Hyundai, GM, and even Toyota. Enterprise value is a more complete picture of how much a company is worth, including its debts, its cash that it has, and also its equity value. If we just take an example of, say, Toyota and VW, they make about 10 million cars every year. Tesla only makes 500,000. The cars still rank at the bottom third when it comes to reliability. Sure, it's conceivable, but I think it's very optimistic that the cars will live up to the expectation that the stock actually has. And if it does fail, it will be worth a lot less than the current valuations. That's the scary thing. But at the end of the day, at least Tesla have a product that they have, and people that will buy Tesla will drive Tesla and feel Tesla and sit in Tesla, a Tesla car. Things get a little bit more crazy. There is a parody, and that is Nikola, and again it's named after Nikola Tesla. So Nikola plans to make hydrogen fuel trucks. Let me say that again. It plans to make hydrogen fuel trucks. It hasn't made any. There is no real product. It is pure blind faith that people are actually investing in this stock when there is no product. And that is where it becomes so important when analysing financial statements. Because how can you invest in a company that has no revenue, just an idea? It's crazy because FOMO, the fear of missing out, has got everyone super excited about the Nikola stock, and it's been valued at over $24 billion. That's more than Ford, and Ford produce over 6 million cars a year. That's insane. So what the hell am I missing here is the question. Going back on a more serious note then, I'm looking at a company like Hertz, which is a car rental company, and they've gone into administration because their business was destroyed over the past few months because of the coronavirus crisis. And as it filed for bankruptcy, it had 19 billion in debts. And with a company like that, it's very easy to value because they value at zero, so investors know what to expect and they know that they're not investable. So it's a speculator's game. But the weird thing is, the prices went from 0.85 before it announced to $5.5 before it crashed again. It's so odd. What's causing all of this? So based on research and articles and news at the moment, it's the rise of the day trader and the e-brokers. I was speaking to another YouTuber, and the market has been transformed with these liquidity trades that are being pumped into the market from all these day traders, and doesn't help that the bookies are also shut. This isn't a power recovery when you think about it. And these day traders are just pumping money into companies at a whim without really thinking about it. We have seen this kind of behavior before, and that was in the dot-com era. The one thing that remains unanswerable is that how will it actually end? No one really knows. All we can do is rely on the markets to correct themselves and hope that it will just be those hot stocks that are just affected by leaving all the rest of the market unscathed. But that was a little bit of a rant, so sorry about that. Let me know in the comments below what you guys think and what you guys are doing. In the meantime, please hit that like button, subscribe if you haven't already. But until next time, cheers guys, bye!